Market update here on the 6th. So I'm going to get into this video. I'm going to get into what I think for the first, probably about 2/3 of the first quarter, what I think is going to happen. And let's go over QQQ though on smaller time frames first. So what I think about this move, so Friday was obviously a very annoying day, back and forth. I personally think it is looking like it is an expanded flat, and we actually did bottom at the spot that I was talking about for the expanded flat up here. So we basically hit the 1.61 fib. And then I was playing this going into Friday. I was playing this as potential start of a 5-wave move down here to this phantom print at 391. However, we got a lot of chop, and I think that this is potentially the end of a B wave, and we played out that whole B wave for about a day and a half. And so I'm personally leaning towards a huge gap up or big move higher on Monday morning. So if that doesn't happen and we come down here to the phantom print into weekly demand, that should be the bottom right there. So we're either going to gap up or go higher here. It'll probably take maybe a full day to finish a C wave potentially. So we're looking at something like this, potentially all the way up here to 402.25. So that would be a really nice move there. The daily 20-day is at a little bit below or above that. So that would complete an overall A wave. So if that were to happen, that would be A. And then I would expect a pullback again, and then probably another move higher like this. Potentially that's only the overall A, but let's just see. You're probably going to get something like that, and then you're going to get another pullback, and then I think this can last all the way till earnings. So if this lasts till earnings, you're looking at like January 22nd, 23rd, 24th, something like that. Probably just looking at something like this. Maybe even into the end of January, something like that. So we have a daily gap fill starting here at 107.56. I'd be looking for that to fill, and this would be considered the overall A wave. If it goes lower though on Monday and we do this phantom print right here, we hit this area right here, weekly demand, then I got to start considering that this is actually the 5th wave right here, and this was actually a first wave or an A wave down. So that would change things a little bit. I would still be looking for a bounce out of here, probably to at least the 0.5 fib. So still back up here to like 402. But it wouldn't be that good. I'd rather have it bounce right away, basically, because then we're looking at an ABC move down here to this area right here, 373 to 378, and that would complete an overall 4th wave. So we'll see which one we get on Monday, but either going to be gapping up here for a C wave, or it's going to be some kind of ending diagonal down here to 392. So I'll come back to QQQ here in a second. Let's go over Apple. Apple is going to be the basis of a lot of the analysis. Let's zoom out here. So again, Apple, assuming that this was going to be a 4th wave right here, but as you can see, ended up being A, B, C, like that. So this is the overall B wave. And so I think this is going to at least 173 If it goes to 173, it's possible it could come down here right away, but I don't think so. It's still above the 200 DMA, about to hit it. So I think that there's a better possibility that we bounce. And here's the thing about this move. You look at the time length. This started in July. This went to December. That is 5 months. So I'm looking for about 2.5 months for this to finish. That takes us all the way into the end of February. We're only at the start of January. So at this point, I think it makes sense that this is wave one. We bounce into earnings like this. I thought earnings were on the 3rd, but maybe not. Whatever, we bounce up here for a second wave, and then we get this into late February, early March. And honestly, if it goes all the way down there, it can hit 157. So you see here 169 based on that finish right there. And then we'd bounce and then come lower, potentially to 157. That's been a gap that's been there for a while that we haven't hit yet. So anywhere between 173 and 159. But if you think about that, that is like 13% lower from here. So thinking about that, QQQ, if it were to go down 13%, that's like 350. So basically, just looking at Apple, I think that there's a very good chance that this is going to be the last time you can sell or buy and like make some money on a bounce for a while. You're not going to want to buy it right here. So I think that this next bounce going into earnings is going to be the last run for probably like 2 months. After that, it's just going to be a bloodbath. That's what my analysis is showing. This is definitely an ABC move. It's possible there's a shorter C wave, but just going by the time length, this makes the most sense. So Apple, if that were to happen, it could end up being a second wave of a fifth wave, because remember, this is a corrective move. B wave's above the A wave, so it's not the start of a crash. This could end up being this. I know that sounds kind of crazy. It could also be this the top right here, and this could be corrective move, bounce, corrective move lower, etc. So we don't know what's coming. All I know is this short-term part, and I'm looking for probably 157. So that gives you an idea of what I think is going to happen over the next 2 months. But there should be a bounce starting next week. So if Microsoft, if it's going to do the same thing, this is definitely a fourth wave. I think that this could be in a fourth wave right here. So I think Microsoft is going to go to at least 350. But it could also be in a wave one. And we're just making a wave two. So it'd be a little bit different than, No, would it be different? Yeah, it'd be a little bit different than Apple, because Apple's already in a C wave. This is in a B wave. So it's possible that Microsoft doesn't go down as far, but it could also do ABC, bounce, and then come lower even more. There is a gap at 338, right, in a demand zone right there. It could be in wave two as well. So short term's all we can really know, and what I'm thinking on Microsoft is 380 soon. So that would give you about a 4% bounce over the next couple of weeks up here to 380. Let's go over Amazon. So Amazon's kind of a tricky one because it looks as though it's already completed 5 waves. But again, it could end up being in a very drawn out fourth wave here. This is kind of a corrective move, or it could be in an extension too. So I don't know on Amazon which one it is. If it's going to be a fourth wave based on how far Apple would go down, I would expect it to come down here probably to like 130. If it's a second wave, then yeah, you're looking at something around like 131 to 136, potentially all the way down here to 125. So it kind of remains to be seen on Amazon, but yeah, they're all going to be the same over the next probably couple of months. Let's go over Meta. Let's go over Tesla first. So what does this mean for Tesla? If we're going to be selling off into probably late February, ignore this. That's probably not going to happen. What does this mean for Tesla? Tesla might be in that WXY move. We might be seeing Tesla go up here to, I don't know, it's kind of a 50-50 thing. I think we're either going to see something like this, or we're going to see where it's going to bounce up here to like 250 over the next into earnings on the 24th, and then we're going to sell off to lower lows. I'd probably be looking at like 217. So that's kind of the base case right there. I think this is probably the most likely, and then that makes this a wave 1. So this would be wave 1, wave 2, and then after that we take off. To 311, and then potentially up here to new all-time highs. So Tesla looking like it needs to bounce here. It is kind of in the same formation as QQQ. So it kind of looks to me like we're going to get something like that. And then it's probably going to end up being something like that. Going into earnings, maybe it goes higher than that too. Maybe let's just see what the bounce would go to. So 0.5 fibs at 246. That's the gap fill too. So it could just go to 246. It doesn't have to go that high. It can go like maybe up 4%, and that could be it. And that could take all the way until earnings. Earnings will be about 2 weeks later. It could end up doing something higher too, though. It could go like that and then come down. But I'm leaning towards that. It's possible that we still get that WXY higher as well. So that would be more bearish though. If that happens, then we're probably going to go down to new lows. Because then you're looking at this whole thing like this. So I prefer a shorter bounce on Tesla and then a move down to like 225, fill the gap, and then go to new highs. So we'll see which one plays out. Let's look at standard deviation. So we were at the very top of that range. That's another reason why down here could potentially happen. So I would actually prefer a shorter bounce down here. But if we get this big move up here, you're going to want to sell because that's going to be the end of the run. So hopefully we get a ripper over the next like 2 weeks. I want to see a rip. Well, I guess I don't want to for long term, but for my positions right now, if I knew that up here I'm going to sell it all day, I would sell everything and then I would be waiting to buy back lower. Probably waiting for, like 175 or so. And I saw a lot of positions or a lot of options for 175 actually. So we'll see what happens with that. But that would be a pretty big drop too. Think about it, 270 all the way down to 175. That's like a 40% drop. So, or maybe not that. Maybe it's like, yeah, like 40% maybe, a little bit less. So maybe that's not realistic. I think it's more realistic that we just get this. Yeah. So that's Tesla. Meta. Meta is clearly in a B wave. So you're looking for anything minimum 305, potentially all the way down here to 232. But 305 seems about right, just based on everything else. And that would be a running flat. So 305 would be my target. NVIDIA. I think NVIDIA is probably going to end up being something like that. And then take off higher. What else we got here? Let's go with the dollar. So the dollar is probably going to be weak or strong into March. So again, it's probably going to end up being something like that. Into March. That's way too far. Or no, it's not. And then we're going to get the sell-off like I've been talking about. So the dollar is very helpful in knowing where equities are probably going to go. Something like that. Over the next, let's see, I said 6 months, which meant April, but it's probably going to be dragged out now. This whole time took about a year. We're probably looking at a year for the C wave. So 11 months from now is right into the election. So I think the election is right where we're going to be topping out in the market. 10-year yield. You're looking at least 4.36 to 4.51 here in the next couple of months, in my opinion. What else we got here? I'm trying to think if I missed any tech stocks. I don't think so. Google, not going to go over that right now. That's pretty much it. Let me look and see what I've been going over. Here's one that I am a little bit short on right now, Affirm. So I think Affirm, though, is actually pretty strong still. It kind of remains to be seen how far all these are going to go lower, because if tech's going to go lower, like if Apple is really going to go down to 157, maybe it won't go to 157. Maybe it'll only go to 173. Or maybe that's actually it, too. Let me go back to that real quick. I don't think so, but it would actually fit the minimum target. So that could be a running flat, too. I don't think so, but you never know. With the dollar not retraced yet, though, I would say this is still going to happen. So I guess money could just flow into growth stocks. That's the one that makes the most sense. On Affirm, I think this is in a fourth wave of an overall third wave. So which seems kind of crazy, but my fourth wave target on this is 36, and here I have it drawn out right here. I think it's probably bottomed right here. Looking for about 47, and then I'm looking for a move down to 36. And you can see the date, February 28th. So That's kind of the layout for every stock right now, in my opinion. Something like this into the end of February. And then you got to think too, when we get to March, and the fund managers are going to try to make their losses not look so bad, March is probably going to be super bullish. March is going to be straight up. That's what I think. And then they'll try to make their losses less, maybe retrace a little bit in April, and then we'll take off in May and June. And yeah, I can actually draw that out again. Let's see. So basically, this is what I think is going to happen. This is probably, it could only come down to 385 too, by the way. So this might happen right here. If it stops right here, the 1.61 fib is 386. If we come down here and get the phantom print, then we can come all the way down here to 378. So into March, and then I think we're going to get something like this. Maybe my timing's a little bit off, but you're going to get something like this, maybe through April, and then pull back. I don't know how high it's going to go, but through June, I would expect and then into the election. This right now, I need to go to the daily. Something like that is kind of what I'm expecting. So really, the next couple of months are the time when you want to be very careful because you don't want to miss, you don't want to be in up here. I guess it doesn't really matter. You can be in up here, you could just wait because we're probably going to go to higher highs. So if you're feeling like you need to sell because the stocks are going down, I wouldn't worry about it because we're going to rip from March until the election, in my opinion. So that's pretty much the setup. That's all I got to say for today. Leave me a comment, like, subscribe. Get ready for a bounce next week. Have a good weekend.